could a listed company allegedly report revenues running into several lakh crores and yet face serious questions from the securities regulator regarding the authenticity of those numbers? What happens when SEBI alleges that critical subsidiary financial statements are missing, transaction level records are unavailable, forensic auditors face restrictions, and investors are unable to verify the true financial position of a listed company? Can non-disclosure, inconsistent submissions, improper consolidation practices, and alleged misrepresentation of financial statements trigger one of the most significant regulatory actions in the Indian securities market? Welcome to Corporate and Securities Law Compass, navigating law with clarity. Today, we will undertake a detailed educational analysis of SEBI's interim order in the matter of Rajesh Exports Limited. This discussion is intended purely for educational purposes to help investors, company secretaries, chartered accountants, CMA professionals, advocates, directors, compliance officers, and corporate governance enthusiasts understand the regulatory concerns highlighted by SEBI. Before proceeding further, it is important to understand that this is an interim order. The observations discussed by SEBI are prima facie findings recorded during investigation and are not final adjudicated conclusions. Let us begin with the background. The matter originated from a shareholder complaint received by SEBI. The complaint reportedly raised concerns regarding large outstanding trade receivables and possible financial misrepresentation in the books of Rajesh Exports Limited. Considering the seriousness of the allegations, SEBI appointed an investigating authority and subsequently engaged BDO India Services Private Limited as a forensic auditor to examine various aspects of the company's financial reporting, disclosures, subsidiary operations, and accounting records. As the investigation progressed, SEBI examined multiple issues which collectively formed the foundation of the interim order. The first issue related to non-cooperation by the noticees. According to SEBI, the forensic audit encountered significant limitations during the investigation process. The forensic auditor reportedly sought access to accounting systems, ERP records, books of account, journal dumps, and transaction-level data. However, according to the observations recorded in the order, substantial information was either not provided or was provided in an incomplete manner. SEBI observed that access to ERP systems was allegedly restricted. Journal dumps were not fully provided. Critical accounting records were allegedly unavailable. Documentation supporting large transactions was incomplete. Even where ledger extracts were provided, narrations were reportedly not fully visible, thereby making it difficult for investigators to independently verify the underlying nature of the transactions. From a governance perspective, this issue is extremely important. Whenever a forensic audit is conducted, the credibility of financial reporting largely depends upon the availability of complete books of account, supporting documentation, and transaction evidence. If such information is unavailable, regulators face difficulty in independently verifying reported financial information. The second issue examined by SEBI related to non-disclosure of material consolidated financial information. This became one of the most significant aspects of the case. Rajesh Exports operated through multiple overseas subsidiaries and step-down subsidiaries located in Singapore, Switzerland, UAE, and other jurisdictions. According to the order, a very substantial portion of the group's consolidated revenue originated from these overseas entities. SEBI observed that financial statements of several subsidiaries were not available on the company's website, despite disclosure requirements under the Companies Act 2013 and SEBI listing regulations. This observation carries an important lesson for listed entities. Investors are entitled to understand not only the consolidated financial position, but also the financial health of individual subsidiaries that contribute significantly to consolidated revenues, profits, and assets. SEBI noted that without access to subsidiary financial statements, investors may not be able to assess underlying risks, related party exposures, operational performance, and financial sustainability of the group. The third issue involved alleged misrepresentation of financial statements on a consolidated basis. This is perhaps one of the most discussed aspects of the order. SEBI examined the relationship between consolidated revenues disclosed by the company and revenues generated by overseas entities. The regulator observed significant differences between certain audited standalone financial statements of overseas entities and revenues reflected in consolidated financial reporting. According to the order, SEBI questioned whether the consolidated revenues reported by the group could be independently verified through available records. SEBI further observed that despite repeated requests, party-wise sales registers, customer details, vendor records, invoices, and transaction-level documentation supporting substantial portions of consolidated revenues were allegedly not furnished. For students of financial reporting, this highlights a fundamental principle. Revenue is one of the most important indicators used by investors to evaluate a company's scale, growth trajectory, and valuation. Therefore, the underlying basis of revenue recognition must always be supported by reliable documentation and transparent accounting practices. The fourth issue related to discrepancies in submissions made by the company. During the investigation, SEBI compared information furnished by the company on different occasions. According to the order, customer-wise sales data, transaction values, and certain revenue figures varied across different submissions made to SEBI. The same customer names reportedly appeared with different sales figures in different submissions. Certain entities appearing in one submission were reportedly absent in another submission. SEBI viewed these inconsistencies seriously because regulatory investigations rely heavily on consistency and accuracy of information furnished by regulated entities. For compliance professionals, this serves as a critical reminder. Information submitted to regulators must always be complete, accurate, internally consistent, and fully reconcilable. The fifth issue involved alleged misrepresentation of financial statements on a standalone basis. SEBI examined certain large transactions involving entities appearing in customer-wise and vendor-wise records. The regulator compared sales data, purchase records, GST information, bank statements, and ledger extracts. Based on the examination, SEBI recorded observations regarding the authenticity and verifiability of certain transactions reflected in the books of account. The order discusses instances where supporting documentation, transaction evidence, and independent verification reportedly became challenging. This aspect reinforces the importance of maintaining complete audit trails, supporting records, and documentation for all material transactions. The sixth issue related to alleged incorrect consolidation. Consolidation is not merely an accounting exercise. It directly impacts how investors perceive the financial strength of a corporate group. SEBI examined the methodology adopted in consolidating overseas subsidiaries and questioned certain accounting treatments that allegedly resulted in significant differences between standalone and consolidated financial reporting. For finance professionals, this serves as a reminder that consolidation must accurately reflect economic reality and comply with applicable accounting standards. The seventh issue involved the claim relating to investment in gold mines in Africa. SEBI examined disclosures relating to such investments and assessed whether the representations made were supported by sufficient evidence and documentation. Whenever companies make strategic investment disclosures, investors rely upon those statements while evaluating future growth prospects and business expansion plans. Therefore, supporting evidence becomes critical from a disclosure and governance perspective. The eighth issue related to adjustment of trade receivables against trade payables. Receivables and payables are important balance sheet items that influence liquidity, working capital management, and solvency analysis. SEBI examined certain accounting adjustments and questioned whether such adjustments appropriately reflected the underlying commercial substance of the transactions. This issue demonstrates the importance of maintaining transparency in balance sheet presentation and accounting treatment. The ninth issue involved alleged misutilization of funds. SEBI examined fund flows, utilization patterns, and related transactions to determine whether corporate funds were used in accordance with disclosed purposes and applicable regulatory requirements. For investors, fund utilization is one of the most critical governance indicators because it reflects how management deploys shareholder resources. The order also discusses dealing in securities and price volume impact. Whenever material financial information is questioned, regulators naturally examine market activity to understand whether investors may have been influenced by potentially misleading disclosures. SEBI therefore reviewed trading patterns, price movements, and market behavior during the relevant investigation period. The order then proceeds to discuss the prima facie findings against the notices. Based on its analysis, SEBI recorded various prima facie observations relating to disclosures, financial reporting, consolidation practices, cooperation during investigation, and investor protection concerns. It is important to emphasize again that these observations represent prima facie findings and not final adjudications. The order also explains the need for an interim order. SEBI observed that where investor interests may be affected and where serious concerns exist regarding financial disclosures and transparency, immediate preventive action may become necessary pending completion of detailed proceedings. This reflects one of the core objectives of securities regulation. The regulator's role is not merely punitive, it is also preventive. Interim measures are designed to protect market integrity, ensure transparency, and safeguard investor confidence until final findings are reached. Finally, the order concludes with directions issued by SEBI. These directions are intended to preserve the integrity of the investigation, protect investors, and ensure that relevant information remains available for regulatory examination. The broader lesson emerging from this matter extends far beyond one company. It highlights the critical importance of corporate governance, transparent disclosures, accurate financial reporting, proper consolidation practices, maintenance of books and records, regulatory cooperation, and investor protection. For company secretaries, this case underscores the importance of disclosure compliance, website disclosures, subsidiary reporting obligations, and board oversight. For chartered accountants and auditors, it highlights the significance of audit evidence, documentation, revenue recognition, and consolidation procedures. For directors, it emphasizes fiduciary responsibility, governance oversight, and accountability for financial reporting. For investors, it serves as a reminder that revenue numbers alone should never be the sole basis of investment decisions. Investors must also evaluate governance quality, disclosures, auditor observations, and regulatory developments. As this matter progresses through the regulatory process, it will continue to remain an important case study in Indian securities law, corporate governance, and financial reporting. Thank you for joining us on Corporate and Securities Law Compass. Navigating law with clarity. Disclaimer: viewing this video or accessing the content on this channel are free and does not create any professional, advisory, or client relationship between the speaker and the viewer. The content is shared solely for general educational and informational purposes. The speaker is a member of the Institute of Company Secretaries of India, ICSI. However, the information provided in this video should not be construed as professional advice, consultancy, or opinion under any law or regulation. Viewers should not rely solely on the information provided in this video for making legal, financial, regulatory, or compliance decisions. Any person intending to rely upon or act on the information contained herein should independently verify the relevant provisions of law and, where appropriate, seek professional advice from a qualified professional. The speaker, the Institute of Company Secretaries of India, ICSI, and any organization or listed company with which the speaker may be associated shall not be liable for any direct or indirect loss, damage, or consequences arising from reliance on the information provided in this video or channel. The content shared on this channel is based solely on publicly available information, general legal provisions, and academic discussion of corporate and regulatory frameworks. The speaker confirms that no unpublished price-sensitive information, UPSI, confidential information, or proprietary information of any listed company or organization has been disclosed or discussed in any video or content on this channel. The views expressed in the videos are personal academic interpretations for educational purposes only and are not connected with or derived from any confidential information obtained through employment, professional engagement, or association with any listed company or organization. Nothing contained in this channel should be interpreted as market advice, investment advice, or insider information under the applicable provisions of securities laws, including the SEBI Prohibition of Insider Trading Regulations 2015. Viewers are advised that the information shared is purely for general educational awareness and should not be relied upon for investment decisions, trading decisions, or regulatory compliance without consulting appropriate professionals and official sources.